Laurence, thanks so much for your time. So just as a point of departure, Italy and the outlook for Spain that you're optimistic about, how does it change things?
I don't think it does. I think our view on entering Spain was driven by macroeconomic recovery, which is still very much on track. If you look, Spain is outperforming the EU in terms of GDP growth, both historically and in terms of forecasts. Unemployment is coming down. And really all the macroeconomic indicators are looking positive. S&P recently upgraded Spain's credit rating. So at a macro level, we're very happy. At a micro level, in terms of the property industry and the retail sector, also the indicators are all good. Clearly, political risk is something that affects us in whatever market we're in. I think it's a bit early to understand all the implications from Italy. The market clearly is skittish. But that happens. The market always reacts quickly, it digests the information, and then things seem to settle. So we certainly are not panicking at this stage of the game. I think our investment is a long-term investment. We like the fundamentals there. Spain is the 5th largest economy in Europe, and we think has got very good prospects for us going forward. So but clearly something we'll keep an eye on, but no panic yet.
In the event we have the worst case scenario whereby we do see Italy following the UK and actually leaving the euro, some talking about a complete dismantling of that area, what does that then mean?
We'll have to evaluate that at that time. I'm still very skeptical that Italy would leave the euro. I think people have seen that Brexit was probably not the smartest decision. I think many people are ruining that decision. I think there are lots of lessons to be learned from it. So, even in Spain, closer to home with the Catalonia situation, I think the EU was very quick in saying that they wouldn't grant EU status to Catalonia if it went independent. And I think that's sending a very firm message, saying that the EU doesn't want fragmentation of states breaking up into smaller states. But we'd have to watch it. So I'm not in the camp of the euro breaking up. I think it will survive. I think people have realized that there's more downside than upside in actually going independent. But let's watch it and see.
So at this stage, no intentions to hit the pause button on your acquisition strategy there?
Absolutely not.
Talking about acquisitions, spending some 260 million euros on acquisitions so far this year. It's a lot of money. Perhaps as a point of departure, which buyer are you most excited about?
Well, I think it's the whole strategy that's exciting us. It's been a very, very busy 12 months for us in Spain. We not only have bought 260 million euros of assets, in fact, that grew post year end. We did another acquisition of 81 million euros. So our asset base is now sitting just under 400 million euros. But critically, we have hired a management team. We've got a board in place, and we are ready to list the company at the end of July on the junior board in Madrid. So it's been a very, very productive year for us in Spain, setting up the business, and I think we've really now created the launch pad for further growth going forward.
And what does that listing mean? Because I see you're not looking to raise any capital from it.
Correct. In terms of Spanish tax laws, if you're a sashimi or a REIT, you have to be listed within a certain period of time. And really the listing is to comply with that regulation, but it's not there to raise capital. For the time being, all the money to grow Castellana will come from Vukile itself.
All right. And what about debt, though?
Well, we fund our properties with debt secured in the local market. Whatever we take on in Spain has no recourse back to South Africa. It tends to be ring-fenced against the particular asset. So we're running the business. The LTV in Spain is around mid-40s, around 44%.
LTV, what do you mean?
The loan-to-value. So that's the debt that we have in there. That is sourced from Spanish banks. We've got 4 Spanish funders and very good demand for lending in that market.
All right, let's bring it back home. So you seem more upbeat about the future of Vukile in Spain than you are about the future of Vukile in South Africa.
No, I wouldn't say that. I think South Africa has always been the, if you like, the stable part of the business. That's our heritage, and it's where we're going to stay. I think we've been concerned historically the last year or two around developments in the country, and we weren't finding opportunities. I think with the new changed political, economic environment, we're more hopeful that we would like to continue investing in South Africa. In fact, we've got an increased appetite. The challenge we're facing is that we are staying very closely focused on our strategy of retail centres only. That's our expertise. And there's very limited stock available, and certainly at prices that we think make sense for investors. So we have the appetite. We're not seeing the deal flow at this stage. In Spain, we have both the appetite and the deal flow.